Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, November 11, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, first and foremost, it's Veterans Day, so happy Veterans Day to all the vets out there. The banks were closed, the bond market was closed, and frankly, the stock market should also be closed on Veterans Day, but it was open, and it was the only store open on the block. By the end of the day, they didn't really do much. They had a quiet, narrow-ranging day to begin with. They were up about 50 cents on the day. No big deal. They were hanging around 600. It's a big, fat, round number early in the day. Here's a 5-minute chart, and right of the vertical is today's activity, and you can see where 600 was, in fact, overhead resistance, the big fat round number. We're still in the melt-up operation after the Trump pump. She's extended from home base. Home base is the 20-period moving average, and gauging by history, she doesn't really like to get too far, can get far at times, but does snap back, snap back toward home base, or at least goes sideways for a while, letting home base creep up toward price. That's likely coming sooner than later. Are we saying she can't go higher from here? No, that's not what we're saying. If you look at this over here, this stretched a little bit longer than the most of the other times where she extended from home base, so she can certainly stretch on an anomaly. We're just on notice right now. Believe it or not, this is also regular way options expiration week, which means that options regular way expire the end of the week, the third Friday of every month. The first Friday of this month was the first of the month, so options expiration regular way is this week. We'll just leave it at weird stuff has a tendency to happen, not necessarily only with the index or indices, if you will, but a lot of times in individual stocks here and there. Here's an example. Tesla is on a runaway train. Doesn't matter the reason why, doesn't matter where it's going to be in 2 or 3 or 4 months from now, but this week you have to be on guard for some type of a pullback situation where the last people in need to get issued a pie in the face. It's the Johnny-come-latelys, the chasers. It's a perfect week for the options people, the options desks, to run a rug pull operation. Tesla's just an example of a potential case in point. We have a weekly chart. Last week closed an on-time type of situation with, as they say in the business, market symmetry. Also, a little bit stretched from home base. Home base is the 20-period moving average. Other than 600 being a big fat round number, inside the number members had a number slightly higher. They were there in the pre-market session today. They never achieved it in the regular hours session. Therefore, same number will be on the board tomorrow, most likely. It's one of those formula-driven numbers only. We do not have a point of reference up here at 600 at new highs. You could imagine, since today was a quieter day, not a lot of day trading going on. It wasn't a day trader's kind of day. It was a creeping market kind of day. We had our eye on 600. That's a big fat round number. We had a gap at 598 and a quarter. That's fair enough. That's obvious to most traders. And you'll note here something important that was brought to traders' attention early in the morning before the opening bell. At new highs, traders have to be patient and tolerant for something logical to take place for a trading opportunity. That's paramount because otherwise you end up justifying yourself into what ends up being a bad trading situation. It's called forcing a trade. They usually end up in a losing situation. What I would urge you to do is pause the video, read the notes, go back to the chart to double check the work. Everything traders need from an intraday perspective on the S&P is in here. I have a relationship with the S&P, and I'm passing the information on to traders each and every day, where the important numbers are, where the trades are, where's the morning trade. We're looking for the morning trade. When you go back to today, there was no morning trade. They didn't even get to the gap. There would have been a trade if they spiked the gap. I told traders in the live room, once they started to bounce, that took that off the table. If they ran higher and made some new highs above 600, we had some stuff going up there from a resistance standpoint, but they didn't give us that either. And then they leaked later in the day. And this is at the point when the morning part of the business is over. This is a different trade at that time of the day than it would have been over here in the morning session for all the reasons we discuss each and every day in the live room. We had two stocks on the move potentials today, SMCI and Upstart. Upstart went the other direction, didn't come into our entry objective, so it's off the table. But SMCI did, but didn't, but did. Let's unpack that one. So SMCI said jump target because it jumped the first number, so that triggers the jump target column, which you may or may not have noticed. So this number's off the board. That was the first number. It opened also below the second number, and therefore the only active target was the third number. From a technical perspective, she did the deal, she spiked it, she kicked back in the other direction and did the deal, turned out to be support. But from a real-time perspective and watching it in real time, here's a 1-minute chart. They came within about 10 cents and then shot up or rocketed back up in the other direction. And therefore, I didn't like that setup. So for me personally, a first time, best time applied here when they came up short and gave you the deal. They gave you like almost a 4% run, and that's pretty good pop right there. So that would have been the trade we were looking for. They came down after that. So I told traders in the live room that was a no deal. And you can see where it did, for the most part for a while, become overhead resistance until they busted on through later in the day. Now, just getting back real quick to the daily chart of the spiders or the S&P, keep in mind they were flat-ish today, up 0.1%, up 57 cents. That's about as flat as you can get without being actually flat. But when you go over to Camp IWM, what you'll notice is they were up $3.50 today, or 1.5%. That's pretty interesting information. It is, in fact, my favorite market leading indicator. It's of note, it's a puzzle piece, it's on the table. Doesn't mean the S&P goes up tomorrow. Maybe the IWM comes back down. But what I am here to point out is we do have a divergence, and divergences will resolve themselves. And this one happens to be with my favorite market leading indicator in the upward or northern direction, and the S&P not following suit just yet. We'll see what happens going forward. This is a puzzle piece, and it's on the table. When you look at the longer-term chart, you'll see what's going on here with Camp IWM. The former high, or the existing high, is 244.46. The high so far here is 242.39. Do they come up short? Do they spike it through? Do they sustain price above? Or do they fail? All these are coming to a chart near you sooner than later. The answers to those questions are coming. Sometimes they come up short. Other times they spike them through. They are extended away from the moving averages. This is a long-term chart. They can certainly spike the former high. Nothing says they can't. Nothing says they won't. This is in an uptrend. The trend is your friend until it's over. That applies to the S&P. It applies to the IWM. It applies to anything under the sun. When the trend is up or the trend is down, the trend is your friend, and it is a very difficult endeavor to fight the existing or the prevailing trend? Write that down, put it on a sticky note. Did they have to get up to $250 or close to $250 or spike $250, a semi-fat round number? You start to scratch your head a little bit and say, hey, wait a minute. Isn't the United States of America coming up on a 250-year anniversary pretty soon? Just saying, those two things are interesting pieces of information that may or may not have anything to do with each other. I'm just the bystander numbers type of guy. What about the folks down at the transportation department? Another big up day, 1.2%, up $212. See, on my second favorite market leading indicator on a nice little rocket ride on this Monday during options expiration week. Pretty far extended, by the way, I'll have you know, from home base or the 20-period moving average. So wherever they stall out, whenever they stall out, I can't tell you from where, but what I can tell you is there's a pullback coming at some point soon. You can see where the former high is. Do they have to get to the high first, or do they pull back before they get to the high? We really don't know the answer to that. Anybody pretending, and it has nothing to do with the transport chart or the transportation index, it's just any chart or any index or any stock. We really don't know which one of those two things is going to happen. What our job is, A, be the umpire calling balls and strikes, and B, understand what the information is that we're looking at, what the meaning of it is, how to decipher it, how to analyze it, and how to use it to your advantage. That's the game we're playing. How do you like dem apples? If there's one thing, and there's many, but if there's one thing that we've been consistent with here is don't fight the trend. The trend is your friend. Might as well stick with the weekly theme going over to the Q people. You could see they're at new highs. So what new information do we have? Today was a narrow ranging day. This entire candle is today's activity. And you can see here on the daily chart, above all the moving averages, certainly above home base. Again, another stretched market. They will be back to run a test of 503.52. How do I know that? Because that's the way the market works. From where will they begin to fall back toward 503.52? That's what I cannot tell you while they're at new highs. Do they have to get to 520 first? Do they have to make an attempt at 520, come up short? How about 515, 517.50, 521? We don't know the answer. Let's not pretend we do. Let's use the information we do have to our advantage and not try and weave in or conflate information that we might want it to be. One of those, write that down, put it on a sticky note. Also, from a weekly chart perspective, we'll note, we have market symmetry and we have an on-time type of situation. And those are the situations where when you least expect it, there's a little bit of a rug tug. Because right now, we're on the Trump pump. We're in a melt-up situation. We got Nirvana going on. Everybody's saying, sure, market's higher, business-friendly, less regulation. All those things are true. But what about the swan we haven't seen yet? It's always around the corner. Same routine with the XLF, the financial people. They're at new highs. They're screaming higher. They're on the Trump pump. They're way above the most recent breakout area, which they kind of ran a test of. And when you go back to the daily chart, we'll remember over here on the 4th of November, we talked about it back then. They kind of made a test of it. They didn't quite get there, but the low was 46.03 against 45.90. That's kind of in the orb of the give or take. And then when you look at this big up day, this gap higher opening on that kind of volume, that certainly spells and signifies institutional participation. But wait, there's more. And here is a canary-ish situation. Smash Mouth, or the Philadelphia Semiconductor Index, down $5.81 today, 2.25%. Now check this out. This is what the intraday SMH looked like. And when you bring over the chart of all the markets we cover, this is included now for Inside the Number members and Live Room members. You'll note here SMH 252.40. There's your 252.40. We have guys like Sean in the Live Room made $4,700 off that bounce off 252.40. He wasn't the only one. There were others. That list of market is provided each and every day. More value for both Inside the Numbers and Live Room members. Then we have a comment or question that comes during the Live Room session. Hey, can you take a look at Tesla? Where's it going? Well, that was the answer. 355. How you doing? That was the target and overhead resistance. Apple's Granny Smith. Now let's get back to this for a second. We're back to Smash Mouth. We're back to the daily chart. She's running a test of the 20-period moving average. You give up the 20-period moving average. You get into no man's land. She's going to have to go fill the gap down here at 248.31. Why is the SMH not rallying with the rest of the markets? That's what I want to know. That's the divergence that has me scratching my head. It's not necessarily the divergence today between the IWM and the SPY. It's the divergence between all the markets that were up today and the SMH that was not up today. And I go back to that day, that $14 down day. We talk about it every single night. And yet here they are last week running a test of the high vicinity, the area of the breakdown candle high. And this week, all of a sudden, opening with a gap lower open and continuing lower, getting ING in italics rejected from the area of the breakdown candle high of the big time on volume $14 down day in Smash Mouth. I still can't help but notice that. We've talked about it every day since that day. Of note, puzzle piece on the table. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.